It would seem obvious that proper tax planning is an important component of retirement planning. Yet as the baby boom generation is entering retirement, many are finding that they are paying much more in retirement taxes than they had originally planned. Here to discuss some important tax planning strategies that can help people reduce taxes in retirement is Denver Noes of Wealth for Life in Scottsdale, Arizona. It's good to meet you, Denver. Welcome.
Thanks, Scott. It's great to be here today.
So what are some of the most important things people need to know about tax planning for retirement?
Well, one of the most important things is if you look where most Americans are saving, they're saving into tax-deductible plans. Plans like 401k plans, IRAs, SEP plans, defined benefit plans. These plans that give you a tax deduction now, but you have to pay the taxes later on during retirement. And so a critical thing to know about these tax-deductible plans like a 401k is that it's not a tax savings, it's a tax deferral. You don't pay the taxes now, but you pay them later on during retirement. And this can unfortunately lead to some unexpected tax bills, some very large ones in the realm of hundreds of thousands of dollars. And in fact, for many Americans, if you look at the overall taxes they're going to pay, they can pay much more in taxes compared to the savings they got from using these temporary tax plans.
One of the ideas behind these tax-deductible plans like 401ks is that, you get the tax deduction right now while you're working and in a higher tax bracket, and then when you retire, you're going to be in a lower tax bracket, and that'll save you money. Isn't that the right strategy?
Well, unfortunately, as a lot of baby boomers are getting into retirement, they're finding out that's not the case. And part of the problem, Scott, was that when the 401k was invented back in 1978, we actually had 26 tax brackets in the tax code, with the top tax rate being at 70%. And at that time, the brackets themselves were very small, meaning the income range between those brackets was very small, so it was very easy to move down in brackets. And so the idea was if you're an executive, you're in that 70% bracket, you get down to retirement, it's very easy then for you to drop into one of those lower brackets. So at that time, these tax-deductible plans made a lot of sense. Today, the tax code is very different. We have just 7 tax brackets. The income ranges of those brackets are very broad. So it's much more likely that people are going to find themselves in the same tax bracket during retirement that they're in while they're working. And certainly for high income earners, that is income earners, people making over $100,000 a year, they're almost certainly going to find themselves in the same bracket that they're in while they're working.
So I guess the big question, Denver, is postponing taxes until retirement a good idea? Also considering the fact that taxes may be going up sometime in the future.
Well, certainly if you're a successful professional out there, you do not want to get down to retirement and have all of your income being taxable. And that's unfortunately the direction that most Americans are heading because all their money is going into these tax-deductible plans like the 401ks, the IRAs, the defined benefit plans. And that's not to say that we don't use these tax-deductible plans. They're certainly part of life and there's advantages to using them. But what I advise clients is as a general rule, you want at least 50% of your savings going into a tax-free position, into a position that can grow for you down the road create a tax-free income stream during retirement. And that can make a huge difference because, as you alluded to, taxes are probably only going up.
Well, Denver, in our last few seconds here, I guess another important question might be how do you set up a tax-free plan if you're a high-income earner right now, and what vehicles would you use to create some tax-free income? If somebody had questions watching this, how could they get in touch with you?
Well, a great first step is go to our website, taxfreeisbetter.com. They can download a free ebook, and that will go into more detail about a lot of the topics we discussed today. We'll also show them some actual case studies about how they can use these tax-free strategies to reduce taxes by in the neighborhood of 50% or more during retirement. It can make a huge difference. So the website Tax Free is Better is a good place to start. They can also call my office directly in Scottsdale at 480-970-5663. They're welcome to call and ask any questions, pick my brain a little bit about the tax-free strategies we've been discussing.
All right, Denver, great meeting you. Thanks for joining us.
Thank you, Scott. It was great to be here.
My guest has been Denver Noes of Wealth for Life in Scottsdale, Arizona, and you're watching Retirement News Today.